Welcome to the News Hub. It's time for our monthly jobs report we've been waiting for, and just in now, the unemployment rate has dipped to 7%, and 203,000 jobs were created last month in the U.S. economy. That's much more than people were expecting. Welcome, I'm Simon Constable, and we've got Sudeep, Reddy and Phil Izzo with us. Let's go to Sudeep first. Sudeep, this is a good number by any standards.
This is certainly a good number. It's not a great number. It's nothing to get truly excited about, but it is a good number, and it certainly confirms the trend we've seen with payrolls over the last few months. And it really creates a difficult dilemma for the Federal Reserve when they meet later this month to have to assess whether this is enough for the Fed to start pulling back on its bond purchases, which of course a lot of officials want to do. The drop in the unemployment rate as well, we're going to have to see what exactly drove that when we get Phil on, but dropping to 7% is an important benchmark. If you think back, this was what Chairman Bernanke back in June originally set as where they want to end the bond purchases. They actually a few months later called that guidance inoperative and have moved on from that. But we're going to see a lot of people reacting to this mix of numbers as really important for the Fed calculus as well.
It'll be a very interesting day in the market. Stay with us, Sudeep. Let's get Phil Izzo in the newsroom, who's plowing through the numbers now. Phil, what are you finding there? One of the things we've all been looking at is the participation rate. Are people actually trying to find work?
The participation rate stabilized last month, which is a good thing. A bunch of people came back into the workforce. Not quite as many as left last month, but still about almost 500,000 people came back into the labor force this month. That's good news. The unemployment rate fell totally for the right reasons. The number of unemployed people dropped. The number of employed people was up substantially. So that drop to 7% looks pretty good. There's still a lot of people, the labor force participation rate is still low, and there are still a lot of people who are not in the workforce who probably should be, but this month it looks like a decent number.
Yeah, and it's still, I mean, historically, Phil, this is still quite a high unemployment rate for where we are in the business cycle. If we remember back to the 90s, if we can remember back that far, I know I can, getting below 5% was considered really, really good.
Sure. I mean, and the other issue to remember is that we didn't have as deep a recession before the recession in the 90s was nowhere near as deep as the one in the early part of this millennium. So, I mean, the problem is that we have such a huge hole to fill that we've made significant progress. You're exactly right, though, that 7% is way too high, and there's still a lot of long-term unemployed. People have been unemployed for more than 6 months.
Okay, Phil, we'll be coming back to you. Back to Sudeep now in Washington, D.C. You mentioned the Fed's money printing program where they buy bonds and create money for the economy. People have got to be looking at this like, okay, we're now seeing sustained growth. You alluded to this earlier. Markets are going to react ahead of any announcement from the Fed, aren't they, if we're going that direction?
They absolutely will react, and the Fed will actually be watching that market reaction very, very closely to determine whether it's time for them to start tapering. The Fed has been very, very careful trying to get a message across that tapering, pulling back on the bond purchases, is not equivalent to tightening, meaning raising interest rates or even selling some of that bond portfolio at some point. So they've tried to get this message across. It hasn't really worked. The tapering, not tightening message is going to come out even more when the Fed has its meeting. But this is a real opportunity for the Fed to decide, do they really want to taper right now? Are they eager, given the risks of the bond buying program? You've already seen a huge run up in the stock market. Enough people are talking about bubbles that you have to at least wonder whether you're creating some unsustainable financial problems out there. But also the reality is the economy is still somewhat crummy. Things aren't as good as some things on the surface appear, and the Fed is going to really judge that. Unemployment at 7% is far better than the 10% we were at a few years ago. It's still really awful for tens of millions of people out there, and that's very, very high on the minds of Fed officials right now.
And it should be. I mean, it is very, very bad for many millions of people. We thank you for your time. Sudeep, Reddy of the Wall Street Journal, and Sudeep will be doing some great commentary on WSJ.com.